Upadhyaya is Chief Investment Officer, Equity at Kotak Mutual Fund. Harsha, great to have you with us here. Thanks very much for your time. Good morning. What's the broad kind of focus or sort of thinking about markets at the Kotak investment team, Harsha? Are you guys still a little cautious about the run that we've had? And of course, I mean, we are well into the earnings season. So perhaps you have a bird's eye view of how earnings have panned out. That has also been one concern for you for the last 2 quarters at least. Go on.
Good morning, Prashant. Clearly, the earnings season has panned out more or less in line with expectations, I would say. Nearly 80% of the companies from the Nifty basket have announced results until now. And I would say a majority of those have either met expectations or have exceeded expectations. Not by a large margin, but by a small margin. So to that extent, the bias towards companies which have seen either stable earnings growth or a slight bit of upgrades is higher. So we believe that the confidence in terms of reaching those mid-teen kind of earnings growth for the next 2 years on the Nifty basket is definitely quite higher, given how this earnings season has panned out. Having said that, we should also remember that we have seen very, very strong inflows from foreign shows for the last 4 months, which has driven the markets across the board, not just large caps, but more so in case of mid and small caps. And to that extent, the valuations have definitely moved up higher than our comfort levels, at least in the immediate term. So to that extent, we continue to remain a little cautious on the markets.
Okay, continue to remain a little cautious on the market. By the way, the big Nifty gainer right now, the biggest Nifty gainer is Hero MotoCorp after that fabulous response to the Harley-Davidson X440. Remember, the bookings will be, the deliveries will start from October of this year, but they've already received almost 26,000 bookings for the new Harley-Davidson. But just want to point out that if you compare the performance of Hero to Bajaj Auto, right, Hero has seen a big underperformance this year. The stock is up 10%, while Bajaj Auto is up 30%. So it's definitely playing catch-up to some of its peers in this space. Harsha, thanks for joining in. I wanted your thoughts here because the premium end of the market is definitely picking up, right? Not just in two-wheelers, but across real estate, other pockets as well. How are you feeling about that? And what's the best way to play it?
Definitely. When you look at consumption basket, the premium end has remained quite resilient all through the COVID period as well, I would say. And even post-COVID disruption, we have seen that basket doing relatively better than the rest of the consumption basket. And our thesis on two-wheelers is definitely we have seen some of the large disruptions in the market in the recent parts with electric vehicles coming in, with margins going down, with no new product launches affecting the consumer demand, etc. And at the same time, even the valuations had taken a knock in this basket, and just in line with what had happened the overall automobile sector, as well as, in particular with two-wheelers. Now that we have seen new product launches, now a little bit of stability on the volumes. And as we know, most of the manufacturing segments, including two-wheelers, will gain from moderating inflation on the raw material side. We should see better earnings growth from this basket, and that's what the market is reacting to.
Hi, Harsha. Morning. Good to hear your thoughts as always. Harsha, what do you make of these new age themes? They were down and out, but some of them have come back in style. They're making the right noises right now. The management commentary as well is looking up, and they're on their path to profitability. Do you like some of these stocks in there, and what would be your pick?
Nigel, I can distinctly talk about 2 phases in the past. One was just around the time when most of these companies got listed. There was complete euphoria, not just in our markets, but across the board, across geographies. And that led to euphoric valuations. And later on, we had valuations coming off across the board, and more so in terms of the high-tech or the internet companies in other geographies, as well as our markets. We did see a lot of other overhangs also playing out in terms of existing shareholders selling out, some management changes in many of these companies, etc. Now we have seen a little bit of stability, at least in some of those companies. Obviously, it's not a homogeneous basket. So to that extent, we'll have to evaluate them on a bottom-up perspective. But those companies which are delivering on the promises made earlier, those which are moving towards path to profitability with a visible roadmap, are the ones which will probably tend to outperform the rest of the basket, in our opinion. So I think the one-way move upside and the one-way move downside were things of the past. Now on, it will be based on how these individual companies will perform going forward, and that's what will determine their stock performance in our.
Harsha, I wanted to ask you about small caps. I reckon there also you kind of take a sort of stock-specific kind of view. But again, I mean, the up move in the small caps particularly has been dizzying, right? As someone was joking, it's like 0.5% daily compounding. It's literally been that for a while. What do you make of it, and what is the approach broadly now at Kotak? If you can kind of provide us with some granular details about your thinking.
Prashant, you're right. I think if you look at the small cap basket, that has done much better than the large cap basket. And most of the foreign liquidity that we have seen in the recent times has moved into mid and small cap basket. Not so much into small caps, but definitely into mid caps. And we are continuing to see that liquidity coming in. And at the same time, we have also seen a definite shift in terms of the SIP numbers within our domestic market, wherein a large proportion of investors have tilted towards mid and small cap SIPs. Rather than large cap oriented funds in terms of SIP investments. So overall, given that the fund flow has been very, very strong at this segment of the market, and the fact that these are not very liquid, we have seen a kind of a larger move as compared to large caps in this basket. And clearly, as I mentioned, the earnings delivery and the sustenance of flows will be very critical for this basket, more than what you would say for example, large caps. So to that extent, they continue to remain more expensive than large caps. But yes, if you believe that there is an earnings cycle which has turned around, and over the next 3 to 5 years, India is going to do much better than the rest of the economies with more of the segments participating in that growth, then definitely even small caps would be an interesting area. But at the same time, one should remember that given the kind of very sharp up move that we have seen in the last 4 months or so, it cannot be a one-way market from here on. One has to prepare for some volatility at some point of time in India.
What are your thoughts, Harsha, on what's happening with the banking space? The banks are just not performing, and there's of course one theory that perhaps the best of the banking performance in terms of earnings is now behind us, and margins are going to moderate from here. Would you sort of agree with that view? And if yes, would you churn out of banks and into any other sectors?
Sonia, I think clearly the ownership has been the single biggest factor driving the performance of banking stocks at this point of time. While, as you rightly mentioned, the results have been very, very strong, we have not seen commensurate stock performance, since most of the institutional investors already have kind of a reasonable exposure to this segment. While margins are definitely going to look a little softer going forward, we still believe that the earnings growth for this basket is going to be better than the average market earnings growth that we would see. So to that extent, we cannot say that this segment is going to underperform over the next few quarters. But at the same time, I think the kind of outperformance that we have seen from this basket maybe is going to moderate. So to that extent, there cannot be a uniform kind of a rally in this segment, which is true for the entire market in our view. Most of the market segments, most of the sectors have gone to elevated levels of valuation. So to that extent, we cannot expect a uniform kind of an up move from here on. It has to be more stock specific.
Harsha, what about the old economy stocks, cement, infrastructure? How do you play them? Getting into election, you see some bit of ramp up, some increased spending as well. What do you like from these themes?
We continue to remain very positive on this basket. Even though we had COVID disruption over the last 5 to 6 years, we have seen overall investments doubling. That is private capex and public capex. When I say public capex, center and state put together, this entire aggregate number has almost doubled in the last 6 years, despite the issues that we have seen in the economy. And there is no reason to believe that this kind of a growth rate cannot be met over the next 5, 6 years. In fact, it's going to be much higher. And also, if you look at the immediate near term, there's an election coming up. So to that extent, most of these investments which are earmarked for growth will also go into many of those projects in the next 3 to 4 quarters. So clearly, the demand is likely to remain very, very strong for this basket. We do have a very positive opinion on that. Some of these sub-segments had seen a bit of an earnings growth issue given what had happened during COVID, and also because of the cost inflation that had come through over the last 4 or 5 quarters. Now that the inflation is moderating, we should definitely see a larger profitability move as compared to overall our top line growth in some of these segments, and that's what we are excited about.
All right, we'll let you go on that note, Harsha. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. That's Kotak Mutual Fund.